India's chief economic advisor KV Subramanian has said that India is likely to report a current account surplus by the end of this financial year ending in March 2021. Is the Indian economy on a track to recover? Here's a look. A survey by IHS Markit has revealed that India's manufacturing and services sector are expanding. The Purchasing Managers Index for manufacturing in May 2020 was at 30.8 and for services it was 12.6. From the rock bottom, it improved in October 2020 as it reached 58.9 for manufacturing and 54.1 for services. Later, the PMI for manufacturing in November 2020 was at 56.3 and for services it was at 53.7. Thereon, the PMI data has been showing signs of recovery. India's manufacturing PMI for February touched 57.5, the PMI for services touched 55.3. While the Indian goods producers stated that there was a healthy inflow of new orders during February, there was a contraction in sales and business operations of the information and communication sector. The composite PMI output index that combines the output of both services and manufacturing has increased from 55.8 in January to 57.3 in February. The demand for imports has dropped due to the pandemic along with the economic reforms initiated by the government to boost the manufacturing sector. This led to a balance in imports which would lead to a surplus. Overall, there are clear signs of economic recovery in February, speaking of which India exited technical recession. According to the National Statistical Organization NSO, there has been a growth rate of 2.6% in the third quarter against the first two as the performance of manufacturing, electricity and constructions improved. The S&P Global Ratings Agency has also predicted that the economy could grow 10% in the fiscal year of 2022. However, it says that the economy still faces important risks as it transitions from stabilization to recovery. It also noted that there has been an increase in consumer prices and the domestic demand has revived post-lockdown. The Indian Railways freight loading has risen. The Indian Railways loaded 112.25 million tons of cargo in February. It is 10% higher when compared to 2020. The earnings from freight services for the Indian Railways is higher by 7.7% against the previous year. Employment is still a distressing factor for the economy. Job losses occurred across both the manufacturing and service sectors as the data from the PMI surveys show. Employment has declined for the third month in a row. While the new businesses grew, the employment rate in the service sector dropped in February. The rise in crude oil prices is also a concern. India imports 84% of its oil and depends on West Asian supplies to meet 3/5 of its demand. Crude oil prices soared after the Organization of Petroleum Exporting Countries decided not to increase the supply in April. This will impact the economy too. The Minister for Petroleum and Natural Gas, Dharmendra Pradhan, said that this would undermine the consumption-led recovery and affect the consumers in the price-sensitive market. The oil prices continued to rise on Friday too. The prices of petrol, diesel and LPG cylinders also rose. For LPG cylinders, the total hike in February alone was Rs 100. In addition to this, the inflation rate also accelerated. Inflation remains a topic of concern too. As the demand for raw materials and semi-finished goods spiked, it caused upward pressure on input cost inflation.